What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a relatively flat day with not much movement in the price action as we're going into a very exciting week full of catalysts. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.12% as we now have SPY closing back over all the moving averages for 4 days in a row. And we did test the 50 EMA as support yet again, and we continue to find buyers at that level. Now keep in mind, we did have the lowest volume day of the entire trading year, so there is not a lot of activity moving price action around right now, but we are still in a bullish configuration with our higher low and higher high breakout, and we do have all of these moving averages starting to stack up to the bull side. So for that reason, we want to stay bullish while we are above critical support. So you have two critical risk levels you can use, and the first one will be the 50 EMA at 394, and the second one will be our breakout at 390. The 20 simple moving average does come into play as critical support, but you're much better off using critical risk levels that are closer to price action to reduce your exposure, because you can always get back in if we lose support and then break out above that level yet again. So for that reason, on SPY, we are bullish as long as we are above 390, unless you are using the risk level at 394. With our next price target being the upside gap close just above SPY 401. And if we break through that gap and continue to trend higher, the next price target will be at 416. So we are going to remain bullish as long as the chart has the higher low, higher high, and we're above our critical support. So it really doesn't get any simpler than that. If we start losing the critical support at 390, we're instantly going to get more risk off because we have no idea how low this market wants to go. And if we lose our critical support, we will want to get a lot more cautious and more downside. Below 390, the next strongest support will be down there at 380. And below 380, it is very likely that we are going to 350. But we do not want to assume we're going down to 350 until we lose critical support. And so far, price action is still holding above that support zone. So there's not much else to say because it doesn't get any simpler than that. We're bullish as long as SPY is above 390 and ready to pivot if needed. On the NASDAQ 100 triple Qs, we were down 0.57%. And intraday, the NASDAQ 100 did come down to test critical support at the 50 EMA. And so far, we did see buyers at that level. But do keep in mind, this was still the lowest volume trading that we've had all year. So critical support on the triple Qs is going to be your 50 EMA at 298, or if you want to get a little more risk on, you could use the critical support at 296. If we break down below 298 and 296, we're very likely coming back down to that support zone right around 287. So I do suggest getting a lot more risk off if we do break down below 296. Upside price targets from here will be the breakout above the previous high at 307, and then we do have price targets right around 313 and 320. So as long as we are above 296, we do want to stay bullish because we do have the higher low and the higher high breakout. Don't overcomplicate it. It is really that simple. If you are following price action, you are staying on this bull as long as we're above 296. You can see that the moving averages are positively sloping as we get the bullish breakout in the price action. So we are starting to develop a bull trend that is likely going to be sustainable as long as price action continues to push higher. We do have big tech earnings this week, so there's going to be plenty of volatility. So if you do not want to play a volatile earnings season, or you do not trust the risk levels to hold up through the overnight session, then you will want to have that in your trading plan to stay in cash and wait for earnings to finish out, because we do have a lot of big tech earnings this week, and that is drastically going to sway the market. In the Dow Jones, we were up 0.28% as the Dow Jones has the same configuration as the rest of the indices, holding up above support with price action above all the moving averages, with that critical support level in the Dow Jones being just below 318 and down here right around our support trend line at 313. As long as we are above 317 to 318, you could stay bullish in the Dow Jones because we still do have a gap to fill at 323. If we close that gap and keep running, the bull's next target will be all the way up there at 333, and that will be very strong resistance on this daily chart. On the Russell 2000 IWM ETF, we were up 0.52%, also bouncing off of the 50 EMA intraday and closing back over all the moving averages. So all of the indices are showing positive price action, and we are starting to develop a bull trend of these higher lows and higher highs. Critical support in IWM is down here at 178 and this breakout level right around 176. So as long as we're above that critical support, you can stay on the bull. If we lose support, look out because we could be coming back down to 170 and possibly even making brand new lows. but so far we do have the bull trend and we are above critical support. The next upside price target will be the gap close at 183.5 and then the previous daily high at 191. On the ARKK ETF, we were down 1.3%, with ARKK coming back down to that 20 simple moving average right around 44 and finding buyers at that level, closing back on top of the 50 EMA. We're getting a lot more bullish above 47, but as long as we're above the support trend line, you can stay on the bull. But I do suggest getting risk off if we break down below 44, because we are still in a bear market as long as we're below 47. Above 47, we could get the short squeeze that takes us up to the price targets at 52 and then 55. But we're not getting bullish until we break out above 47. On the VIX, we were up 1.35%, but the VIX continues to close below 24 and we still do have the bear trend. So as long as the VIX is below 24, that is a bullish configuration. If the VIX starts spiking above 27, we will want to get a lot more risk off for a possible bear market next leg lower. But as long as the VIX is below 24, it is likely that it is trying to trend down towards 20. On Bitcoin, we're currently down about 2.3% as we are retesting that critical breakout level as support at 22,000, and so far we are seeing buyers stepping in at that level. Remember, Bitcoin has to stay above 22,000 for this to maintain the higher low, higher high bullish breakout. So if we do lose critical support at 22,000, you will want to prepare for a retest of the support zone at 19,000. As long as we are above 22,000, look for a retest of resistance at 25,000 and 28,000. with that next breakout level being back over 23,500. On NVIDIA stock, we were down 1.7% as NVIDIA is back down below the 50 EMA, which means we could be coming all the way back down to 161. The safest way to play this is wait until NVIDIA can get back over about 180 before getting bullish. Otherwise, you are waiting for that retest of 161 to see if that level holds as support, or the next gap fill will be right around 158. We do have the higher low, higher high breakout, so we do have the bull trend in the short term. But in order to prevent this from being the bull trap, you will want to wait till NVIDIA can at least get back over the 50 EMA, which is right around 172.5. So keep in mind, below the 50 EMA, critical risk is still down here at 161, so we may have more downside in the short term before we find buyers. Otherwise, we're getting more bullish above 173. In Tesla stock, we were down 1.4% as Tesla was just way too far extended outside that upper Bollinger Band and was coming back down to earth to cool down a little bit. And we're back within the upper Bollinger Band. From here, look for Tesla to try to find support right around $800. And if we do find support at 800, we could retest the high right around 839 and possibly even hit the next price target at 863. Otherwise, look for the full gap close below right around 754. This $800 level is going to be a very critical support. So if we lose that support, look out below. And we still do have potential support at the breakout right around 775. Overall, though, this is a bullish configuration after the breakout of 2 months of consolidation to the bullish direction. So we are looking for Tesla to put in some type of higher low above support. On Apple stock, we were down 0.74% as Apple is extremely close to having the full bull trend once that 20 simple moving average crosses above the 50 EMA. The next resistance above will be 157, and then above 157 will very likely start trending higher towards a gap close at 174. And we do have critical support to the downside at 150 and 147. As long as we are above 150 and above 147, we are very likely going to maintain this very strong bull run. And keep in mind, we do have earnings coming up this week, so that is going to be a very large catalyst on whether Apple continues to trend higher or continues to pull back down towards support. Get a lot more risk off if we break down below 147 because we could be coming back down to about 142 to 143. On the financial sector, we were up 0.64% as we continue to have that bullish breakout look above the resistance trendline. We just need to get over the 50 EMA to fully close the gap above at 33.7. The industrial sector was up 0.48% on the third day in a row, closing back over the 50 EMA. So on the bullish breakout above the resistance trendline, look for the gap fill above. The healthcare sector was up 0.52% as the healthcare has officially entered the full bull trend with the price action above all the moving averages and the moving averages fully stacked to the bull's direction. The next breakout in the healthcare sector will be the close above the neckline at 131 for a very quick trip up to 134. The energy sector was up 3.67% as we're getting very close to retesting the 50 EMA. So as long as the energy sector is above $70, look for a retest of the 50 EMA just above $75. So jumping back over to the S&P 500, keep in mind this is going to be a very exciting week full of catalysts, which means plenty of volatility in either direction. So do keep in mind your critical risk level on SPY is down here at 390, and as long as SPY is above 390, we still have the market structure for a bull trend with the higher low and the higher high. If we break down below 390, instantly get more cautious of more downside, so your risk is very well defined at that support zone. There's nothing wrong with doing absolutely nothing when you don't have clear market direction, but if you're following price action and trend in the short term, it does look like we are trending higher. Also keep in mind that I do have Bank Trade Alerts, which is an algorithm driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.